Milo, do you recommend to link all 5 funded accounts together or start building one by one till we have 2,000 in each? No, always link your funded accounts together. 100%. You should only execute on one of your accounts and it should execute on all. That is always the case, regardless on what your balance or where you're currently at, whether you're an eval or funded, they always link together. You link your evals with your funded accounts. If you have a series of funded accounts, you're not going to bother with grouping evals separately and trying to use 2 different sets of risk management, are you? You can link your Top Step X on TradeSyncer. Make your life a little bit easier. Have them all linked in one place. You can choose to run your Apex PA as one of the leads. Entirely down to yourself. If you guys watched the kind of fake meeting the other day between BlackRock, Goldman Sachs, a couple other institutions which were on that meeting as well, as a 30-minute meeting, and they discussed how they basically talked a lot of shit and they didn't get to the point, obviously, because it is a generalized meeting and they don't want to put forward their positions and interests which would make other competitors money. But the one thing they did say, which was quite interesting, was that they're extremely fearful from tokenization of standard currency during the central bank going tokenized. That was one fear, and what would happen to the US dollar. And the other thing that they did say is that the whole economy right now is extremely at risk to do with high debt worldwide with all different countries. So it is interesting to hear their point of view on things. And they do play dumb and act dumb in that meeting as well. Only BlackRock's CEO spoke a little bit of knowledge at the start, and then he kind of shut up and he didn't really say too much towards the end. There's another female in the meeting as well. She represents Saudi Arabia. She was absolutely pointless. She doesn't really have 2 flying clues about what's going on with the economy. I don't really know why they selected her to be a speaker. Bearish order block. If we shift above this high, invalidation is this high, which is the same high as the New York Open on a yes, we would be looking for longs. Well, I would actually say the market right now is the most uncertain time it has ever been, ever. And I strongly believe within the next few years we will see some sort of extreme volatility on the downturn for all markets in a serious way. And gold in itself could have a catastrophic event. If the US decides to sell their reserve and convert it into Bitcoin to become the lead currency in the world, which would crash gold price for all countries who use it as a reserve, including the UK, which would potentially start a war. You know, they'll be able to clear their US debt. So debt would be gone if they clear their gold and put it into Bitcoin. Because there'll be a domino effect. All the other countries would have no choice. What does it mean for trading futures? Extreme volatility. That was exactly what is going to happen over the next 1 to 2 years. This is why next year we're going to make so much money. This year's been great. How do you measure which invalidation high? So for example, when price is shifting above this high, I'm not focused on the high after one, because this is the same area and the same part of price as where it's shifting market structure. But anything after, like this high, that's minor buy side. Price is not shifting through this high. It's shifting through this high and this high because they're in very close proximity, and it's not a 5-minute high. If you go to the high over here, because this is the first level that price can shift on the 1-minute time frame, because this is the first 1-minute high, this would be minor buy side. Yes, bias is bullish. I had the daily down as bullish, 4-hour bullish, 1-hour bullish. Let me just get that down. I had 15 as bullish, and the 5 as bullish as well. Now the intraday might have changed slightly, but regardless, the 1 hour hasn't changed for the next 10 minutes, and it's still going to remain as a bullish on the 4, the daily, and the hourly, which stands us with a bullish bias regardless. For those of you that just joined, if I sound slightly drained or tired today, is because I haven't slept in 36 hours, because my flight got delayed by 7 hours, and then I had to fly for 6 hours, and then go from the airport for 2 hours. And then it's like, the thing is with myself is that I'm not going to go to sleep when I come back, because I will not be up for the next 12 hours. The alarms, when I get to a point of tiredness, alarms don't even, it doesn't work. So I just decide to stay up, you know. Can government shutdown cause us to get less positions recently? No, not essentially. I mean, all we look for in price is just decent volatility, and as long as that's in place and we're not essentially moving at all, then as long as price is still volatile as it is, it's perfectly fine. Still respecting that bearish order block, still a bearish point for price to draw lower as of now. Obviously we just put in that bullish order block that we're currently trading out of, so if price action is going to follow our bullish bias, it will trade out of the bullish order block, and then we can see a shift in market structure inversing that bearish order block. We have 2 bearish order blocks, okay, so we can use any one of these to be paired with a gap. So did you manage to get some good deals to buy for new apartments? I didn't purchase any apartments whilst I was there. I did look at an area for villas. I was just checking out a few different areas on in person to see which would be best. But I also took a look at the site of the 2 units that I secured over in Saffagate. Okay, so you can see we're starting slowly to inverse bearish PD rays. So we've inversed the first bearish order block, which is paired as of now with that 1-minute candle. So as of now, there is no shift in market structure on NQ. NQ shift in market structure is above this high. We have this paired with this potential gap that's forming. ES shifted above this short-term high. Okay, NQ shifting here. I'm going to be looking for an entry if NQ closes above that high, and I'm going to be running a stop placement at the previous short-term low. 30 handle stop on the checklist, half that contract size, and it will be a 2-to-1 towards the first 1-minute high, which would be this one. So our current looking for an entry is at 356. So I'll be taking this with half position, and I'm looking for a long at 35675. It is a 55.75 handle stop. So I'll say again, a 30 handle stop, position size, you half that position size. Okay, so ES taps the gap. I'm going to take that, and I'm going to run a stop placement. and my TP. So my TP, I'm just going to run it a few points below. So we're looking 47675. So we can run it at 7450. There you go. We're looking for this minor buy side. Simple stuff. So as of now, with monitoring NQ, the only thing that we think as a trader and a position manager is that for price to move in favor of our position, we manage our risk accordingly. So as soon as price takes the first short-term high, which has not been factored in yet, we would then trail our stops accordingly to the previous swing low, which as of now, it has not put in any sort of swing low. So even if we took a short-term high, as of now, we wouldn't actually be trailing to any point. Okay, so the short-term high that we are looking at is this one. So just label it as TS. So only when it gets taken can you trail. You can't trail off a tap. And we haven't factored that short-term low in anyway. So the point that we would trail to is 35175. There you go. So we can now go to 35175. So from ES tapping the gap, we did take a premature entry on NQ. That is always the scenario. And because we took it with half of a 30 handle initial stop, and then if we look at the fibs, so from our TP to break even, we're looking at 50%. So essentially if we close above 50% and create a 1 minute bullish gap, we would then move our stops to break even, or if we take a high past 50% of the position, we would also use that as a point to trail to break even. So just because we just tap 50% does not mean that we trail break even. So we're still actually having our position as an open risk. So let me illustrate you behind this live stream to you guys of that. Many people, when they're in a position, they're always going to look at many different factors to what could possibly happen in their position. You should never look at anything to do with just only managing your position correctly. That's it. So the only thing I'm thinking right now is that if price action stays around this area on the 1 minute and puts in this short-term high, taking that would then move my stops towards break even. We do not look at what could happen for price action. We've taken the position and it followed the model, and that's the only thing that we thought at the time for execution side of things. Now we're just on position management. So as we're now about to factor in 10 seconds this high here, which we're about to put in, is going to be a point where we can trail stops. So that's the only thing we're thinking, whether the two scenarios of that we get to trail stops or we get stopped out of the position. Okay, it really does not matter. So just because ES took a high, it really doesn't matter with trailing our position. We still leave it as open risk. We only trail based off NQ. So right now we're currently trading out of this bullish order block, which you can see here. So the two scenarios, if we trail stops or we get taken out of this position, we would then monitor the second and also the lunch macro. So in a bullish scenario, in an algorithmic scenario, price doesn't trade back towards the previous short-term low, hence why we have not trailed to a point of break even yet, because our objective to trail stops has not been met, essentially. Alright, so we just got taken out of this position here. Cancel your sell limit. And then we're also going to monitor the second AM and also the lunch macro as well. So this gives us a result on this position, as I had an entry around 371. Let me just remove this because I'm adding this to our balance sheet for November. Okay, so 0.2714 times 1.5R with a entry from ES gives us a minus 0.40R result on that trade. So that's a minus 0.407R. Okay, so we don't take another position inside of the same macro if we take a losing position. We wait for now the second AM, which is going to be at 10:45. So that's our next window where we'd look, and we can look at price seeking back towards sell side. So currently in November, as of now, we are down minus 1.4R on the month. This is our current result for November. So essentially, a position would put us in a profit. Simple as that. So what I'd like to see towards the second day of macro is price seek back towards sell side, and then recoup for a bullish bias, and then we can look for longs. So accumulation around this area, and then manipulate sell side before the second AM, and we'll see what we get. Whether price wants to seek with our bullish bias and then go straight towards the New York Open, we will see. I'm going to do an update for the P&L section on the Discord for this month, so you guys can see what the current standpoint is, where we're currently at. How do I work out how much R that trade was? Yeah, so basically I looked at my average entry, which was at 371. So not off the actual bullish fairly gap. We got an entry from ES tapping the gap prior, which put my stop placement slightly elevated to what it would originally be if I entered off the gap, which was a 20-point difference. So if you go from 371, so essentially this is how we worked it out. So ES tapped the gap, I got an entry around 371. I had a stop placement at the low, which put my stop placement at 70 points. I was running a TP at the high, which gave me a risk to reward of a 1.51. And then I got taken out of the position at the short-term low, which I had it at 20.75. Okay, so basically if you do 20.75 divided by 70, it will give you a decimal, and then if you do the decimal times by the risk reward, so you would get the decimal result times by the risk reward. That would be your average loss for the position. I don't know if that makes sense, but that's the maths. I'm just editing this P&L for November. Okay, so November 1st. Okay, so we took a Thursday 6th of November. That was our Yeah, from looking at the chat, that's exactly the point that I was getting across over social media about, I don't know if I've posted it yet, but about winning and losing positions, it doesn't make a difference at all. As I said, the thing that you focus on is making the correct execution. That's it. So regardless on disregarding the result, but you guys are not, or some of you are not disregarding the result, you would see it as a losing trade and you'd potentially seek a mistake or seek a 24-hour backtesting session to see if you could improve the model, which, no. Okay, so today is Thursday long. Or 0.4. Same macro last Thursday, we took a long as well. Coincidence. Alright. Alright, Friday 14th. That's tomorrow. Okay, so total monthly P&L has currently just been calculated. It is at minus $35,919.52, minus 1.4R on the month. Okay, so this is just one position, which would put us as a 0.6R profit. Okay, so I'm going to upload this monthly P&L inside of the group, and as we work through November, I'm going to update it. That's what we'll do. Alright, cool. So let me get this over to you guys. Have you got September as well? I didn't trade during September. I was with family. I don't know if you heard me spoke about that before. I didn't trade majority of September. I was with family. And August, I closed out a 12 to 13 hour profit that month. So it was a very big August, around 250. October, I closed out plus 200. And then this month, currently minus 35. So I'm uploading this in the Discord now. Right, you guys should have received a notification there. I've just posted and uploaded the monthly performance statement inside of the P&L section in the Discord, which you can see as of this month. And I'm going to be continuously updating it as we work through the month. What platform do I use for P&L tracking? I created this sheet myself on Canva. So I did it when I was on the plane to Dubai. Created it for you guys. Uploaded it and you guys found it useful and very clear. It gives you the macro, the position type, and the result, the weekly P&L and the monthly P&L. And I simply always have been noting my trades as they're noted on TradeZella. So I just correspond on my live on TradeZella. I can see the positions that I've took, and then I just add it onto the balance sheet, and that's all I did. So we're going to get onto bias in 10 minutes time. I'll keep my mic muted until 10:40. We'll look at bias, and then we'll see if that pairs with a sweep of liquidity. So I'll speak to you guys shortly. Okay, so as of now, in this second day of macro monitoring price, you can see that we have swept sell side. We do remain with a bullish bias, and we're going to redo our bias in a minute and 10 seconds. We are looking for, obviously, the third step. We're looking for a shift in market structure. We have a bearish order block here for price. We are slowly seeing a shift in market structure, which we are looking for as of now on both NQ and ES. So no shift on ES, which you can see. ES has actually shifted above this high, so that's good to see. We've also closed above the bearish order block. Okay, so we have an inverse bearish order block. We have a shift in market structure on both NQ and ES. Sweep a sell side following a bullish bias. And now we're just going to see, do we have a gap on both assets? And if we form a fair value gap on both assets here, our stop placement's going to remain at the low. So it's a standard 30 handle stop. And we're going to be seeking the first 1 minute high. Okay, that's a gap on both. I'm going to be looking for an entry with a normal position size. See if we get an entry off this gap. Okay, so the first 1 minute high is over a 3-to-1, so we would be standard 2-to-1 as our objective. And we are monitoring price to see whether we get an entry. So invalidation for this position would be this high, as it is our area of TP. So we're looking for an entry off this fair value gap, what you can see here. You can actually label this fair value gap as BAG, so breakaway gap. Okay, so trading in a 5 as bearish, 15 still bullish, still seeking that entry there. Just looking at the 1 hour from the, yeah, still bullish. We can still seek an entry here. This is a valid position. We've not taken out anything to invalidate this trade. For example, if price puts a high here and then trades above it and takes that out and then trades back to our entry, that would be an invalid position. But as of now, it's still valid. So this bearish order block you can see was formed and then traded back and took a low. So it is now a bullish breaker block in fact, which is paired with the breakaway gap, a sweep of sell side, a shift on both assets, a gap on both, and a bullish bias. So on message, ES took the high. ES didn't create a short-term high. So if we get an entry off this breakaway gap, I'll be, there you go. That was a very aggressive entry there. Very volatile candle, as you see. So we're looking for a 2-to-1 towards this high. Set a sell limit. Alright, so this is our second position of the day in the second day macro. If this trade was to result not in favor of us, then that would be us done for the day. And as of now, to manage this position, this current short-term high, which you can see here, is where we would actually trail our stops to the previous low. Okay, so that's pretty much it. So now we just obviously monitor price, and we've taken that high, we trail our stops. So that's the only two scenarios. Simple stuff, guys, very simple. Hopefully this all makes sense to you guys. Thought process, the way we determine bias, and finding a position. B plus setup question mark. Yeah, that's correct. It is B plus. So we traded into a 5-minute bearish fair value gap. So it does result with the 5 and 15-minute rule to be a B plus model. And that is the result. So we are done for the day. We took 2 positions today, which resulted as the first one minus 0.4R and this one minus 1R. So that is us done for the day. So I can edit this on the November sheet here. So right now we are currently experiencing, as you guys can see, which is very good to see. I don't want to always show you guys a winning position because I want you guys to experience this as well. So it's good that it, you know, is happening for you guys to experience. So far in November we had, so last month we closed up 8R, and currently in November we're down 2.4R. So if I just add this on, so with your funded accounts and also your evaluation accounts, evaluation doesn't apply to following account management section. Make sure that you're closely monitoring the balance of your funded account or live account of which you are trading on, because you will have to go to a half position size factor until you get back above. Just lost 4 funded, went emotional. How is that possible? So you're risking $300 per trade. If you drop below $1,500 of drawdown, then you go to risking $150 per trade. So it gives you 8 further losses to lose your funded account. Mine's at 1,600. Should I half yet? No. So when you drop below 1,500 is when you go to a $150 risk per trade. So JP, what caused you to lose funded accounts? I don't understand. What happened to you as of that point? Okay, so position long -1R, macro 10.45. If you can't take a losing position, then you are not built for... It's not whether you're built for it, you're just not a trader. You're not able to manage a portfolio. Simple stuff. Okay, so let me add this up. Yeah, exactly. I mean, you know, what's there to rush for? Why are people trying to rush? If you're on a funded account, why would you rush? Right, so that was... Okay. What about for those on evals? You trade your evals and you do not half size. It's an eval. We're not here to manage evals correctly. So you follow the risk management plan. Top step, my finder futures, take profit, alpha futures, other prop firms that have consistency rules on evals. You follow that risk management plan, and if you go into some sort of drawdown, you do not half your size on evals, guys, okay? And when you're on your funded account, use the account management section. If you drop below 75% of original drawdown for 50, that's 1.5k. You go to $150 risk, so you half the risk management sheet, and then obviously you work up to a 4.5k balance and follow the scaling plan. Very simple. Finish today, question mark? Absolutely yes. So when we personally take 2 losing positions in one given day, then I don't monitor the lunch macro, which only happens around once or twice per year, so it's a very rare occurrence. Well, actually, I've not heard that before. That's a good point. That's a good statement. If someone steals $10, do you throw the rest of your bank account away? I've not really heard about it like that before. That's a good point. Exactly. You know, but because it's a funded account, that's why you do it. So if it really chooses you to just trade live, only live, until you get your... It shouldn't even be a matter of fact of you getting things together. You shouldn't have a problem in the first place. You clearly haven't put enough work and time into backtesting. Okay, so I've updated the sheet, and I'm gonna put it as an update on the Discord for you guys shortly. So hopefully you enjoyed this stream. I know obviously it resulted with us losing money, but this is, as far as executing the model, absolutely spot on. So we followed the model correctly to the T, and that is all that you're here to do. Even one position would put us just below break even on the month. So you really do not need to trying to rush your funded accounts. What's the rush? Why are you trying to rush it? Because you're only going to end up like, you know, I don't want to put JP as an example, but JP is the example today. So obviously he's learning the lesson, and it would be wrong for me to sit here and act like I didn't see JP send the message that he lost his 4 funded accounts. So JP will, after, you know, he'll come into tomorrow and his headspace will be fine. But right now he's probably quite pissed, you know, as anyone would be from making that decision. And that is a point to look at of that. Let's say, for example, JP works towards his funded accounts and it took him 2-3 weeks to acquire them. He's now wasted a whole month. A whole month. And tomorrow he can't trade those accounts because of one position. Okay? So it is very, very simple stuff. I mean, there is little to no outside things that you have to think about apart from entering the position and managing your position. Okay? Be real, guys, we have pretty much all done it. Absolutely. I mean, in the early stages, everyone is going to go through this same process. And whether you end up, you could say, becoming detached and focusing on taking the right positions as far as trying to get the dollar amount, it doesn't matter what position you're in. It doesn't matter if you clean bins or you clean, people, or you're a security guard like I was, or an Amazon delivery driver like I was, okay? It doesn't matter what position you're in, you don't deserve to make money in this space faster than anyone else, even if someone's making $1 million per week, okay? The same process lies. Something you have to grasp. You have to grasp that. It's essential. Absolutely, Tommy. Okay, so that concludes our live stream for today. We are going to be monitoring price tomorrow on the Friday inside of the first day of macro. We're in the trade house, and I'm going to be in the trade house for many more months to come. I don't see myself leaving at all. Okay, so 9:20 a.m. New York local time tomorrow, we shall be live, and I will see you guys inside of that stream. I'm going to upload this stream onto YouTube so you can rewatch it at any given point, and feel free to backtest other months as well. Continue to do that. This is great work for you guys to continue to backtest previous months, build confidence in times where, if you're newer to trading this model or you're newer to the space, to not end up like other people losing funded accounts on given positions. Understand your edge, understand the model, understand the probability, see it play out time and time again, and then you will approach price with not a given flying rat, okay, if you was to take 2, 3, 4 losing positions, okay. That's exactly what you'll be doing. And don't forget, in fact, the new channel for the backtesting is coming shortly, and we are hosting our first on the official Discord channel, and it's going to be backtesting on Saturday, okay? So I will see you guys on that one as well, but 9:20 a.m. New York local time tomorrow. Speak shortly.